Hey everyone, stop scrolling. XRP just dropped 4% in a single day, and the network just hit its biggest weekly realized loss spike since 2022. We're talking roughly $1.93 billion in actual locked-in losses. Sounds brutal, right? But here's the crazy part. The last time this exact level of panic selling happened, XRP exploded 114% over the next 8 months. Is history about to repeat? Stick around, because today we're breaking down exactly what this on-chain signal means, why it could be the bottom, and what you need to watch next. If you're holding XRP or thinking about jumping in, smash that like button right now if you're ready for the real talk. And don't forget to subscribe and hit the bell for more crypto signals like this before the next move. All right, let's set the scene. XRP is trading around $1.40 right now, down from recent highs, fighting some tough technical resistance, but ledger activity is actually surging. That means people are still using the network like crazy. This isn't just another random dip. Serious. On-chain data from firms like Santiment is flashing a massive red flag. $1.93 billion in realized losses over the past week. That's the highest since late 2022. Realized losses happen when people sell their coins for less than they paid. It's not paper losses, it's real capitulation. Weak hands are throwing in the towel. And historically, these extreme fear moments have been the fuel for massive rebounds in crypto. Let's break this into the 3 big things you need to know. First, what realized losses actually tell us. Explanatory. Unlike unrealized losses that can disappear if price bounces, realized losses are final. Holders are saying, "I'm done," and selling at a loss. This week, that number spiked to $1.93 billion, matching the scale from 39 months ago in November 2022. Why it matters? Capitulation clears out weak hands. It shifts coins from emotional short-term traders to stronger, longer-term holders with better cost bases. Short example. Back in late 2022, after that similar spike, XRP was in the dumps amid the whole crypto winter. But once the panic peaked, the selling dried up, and boom, price climbed over 114% in the following 8 months. Second, the absorption side of the story. Intrigued. For billions in losses to get realized, someone has to buy the other side. That means liquidity is stepping in at these lower levels. Big players or institutions are likely absorbing the sell-off. This is classic bottoming behavior. Weak hands flush out, strong hands load up. Most people panic sell here. Short pause. But smart money quietly accumulates. Third, but context matters. No signal is perfect. Serious. Cautious. Today's market has macro uncertainty, regulatory noise around Ripple, and volatility in Bitcoin and Ethereum. Still, this level of emotional capitulation often marks local bottoms. The data is screaming sellers might be exhausted.
Let's bust a couple myths quick. Myth number 1. Big realized losses mean the coin is dead. Wrong. They actually signal the opposite. Pain is being flushed out. Paper hands leave, diamond hands stay or enter. History shows these spikes precede recoveries, not endless declines. Myth number 2. If it happened before, it'll happen exactly the same way. Not guaranteed. Past performance isn't future results. We need follow-through, declining sell pressure, stable demand, maybe positive news catalysts. If losses respike soon, it could mean more distribution ahead. Keep it real. Crypto is volatile, but ignoring on-chain extremes is a mistake. So what can you actually do with this info? Here are 4 actionable moves. Tip 1. Track realized losses weekly on Sentiment or similar tools. Set alerts for spikes over $1B. When they hit extremes like this and then start cooling, that's often your entry window. Imagine catching the next leg up early. Game changer. Tip 2. Look for confirmation in other metrics. Watch SOPR. If it stays below 1, more pain. Above 1, recovery starting. Whale accumulation and ledger activity. High activity plus capitulation equals potential reversal. Stay curious. Don't just chase price. Tip 3. Dollar cost average if you're bullish long term. Instead of all in now, buy dips in smaller chunks. This capitulation could be your discount window. You've got conviction, this is when legends are made. Tip 4. Set stop losses and take partial profits on any bounce. Even if a rally starts, macro risks are real. Protect your capital. Don't let greed turn a win into a loss. Quick case study. November 2022. XRP realized losses hit similar minus $1.93 levels amid FTX collapse fears. Price was crushed. Then, sellers exhausted. Over the next 8 months, XRP rallied 114% as the market stabilized and new buyers stepped in. Holders who bought the fear made serious gains. Could the same setup be playing out now? The signal is identical. Watch for follow-through. Bonus insights. Extra value. Bonus 1. Ledger activity surging despite the dip is huge. Real usage doesn't lie. XRP's network is busier than ever. Bonus 2. Watch resistance levels around $1.50 to $1.60. Break that and momentum could shift fast. Bonus 3. Lesser-known warning. If realized losses stay elevated for multiple weeks, it might signal ongoing distribution, not a clean bottom. Patience is key. So to wrap it up, XRP's 4% drop hurts, but this $1.93 realized loss spike is the biggest since 2022, when it led to a 114% rally. Capitulation often marks the end of selling pressure and the start of something bigger. Whether this becomes the next massive rebound depends on what happens next. Demand stabilization, macro tailwinds, and no reacceleration in losses. If you're excited about the potential here, drop a comment below. Are you buying the dip on XRP right now or waiting for more confirmation? Hit that like if this helped, subscribe for more on-chain breakdowns and crypto signals, share with a friend who's holding XRP, and turn on notifications so you never miss the next big move. Thanks for watching, stay sharp out there, and I'll see you in the next one. Peace.